Hello everybody and welcome to my YouTube channel. This is ABC Crypto Tutorials by your boy Father Abraham, and quickly today I'll be taking you through the other types we have on the Binance centralized exchange. So now basically we have four other types: limit, market, and the stop limits. Together with the OCO, which stands for one, cancel the other, and then just right here we have the order book. All right, so we have the sellers, which is this red section, and then we have the buyers at the green section. So now why is this here? All right, this is just to show you the activity of those who are selling and those who are buying. So these guys are selling, so when you want to buy, you go there, not like you enter the market you enter the application or something. You just, so take note of this. This is 22.5. Now when I click on this part, it's going to change. So this is now 22.53. So you just clicking there to make sure you buy at the current price, okay, at which the sellers are selling. And if you are selling, you have to go to the buyers to sell, and then you just click at the recent price, the most recent one there, and then it changes automatically at this other section. So now let's just dive into the topic of today. Let's start with the market price, the market order. So what is the market order? The market order is an order which executes like instantly once you place the order. It doesn't give you the chance to select at what price you want to buy at. It just picks the best price for you, or the next available price, to fill up your order like instantly. And then let's just try and buy chain link with $15. All right, so by the way, you can't do anything less than $10 on Binance. All right, less than $10. So now it bought instantly, right? If I'm selling two, you see it. And the problem with the market order is that it always buy for you at a very high rate. Always buy for at a very high rate, because in the market, you as a person, you want to buy at a lower price, right, and then sell higher. But the exchangers will want to sell to you the same way you want to do your transaction, right? You want to buy at a lower price and sell at a higher price. They will also want to buy from you at a lower price and sell to you at a higher price. So when you are buying, they will make sure you are buying at a higher price, because they are selling to you at a higher price. All right, so when I'm selling this to, this is 9 points. Okay, the price increased. I won't be able to sell because it must be more than 10, so I have to just let me just leave that there. So okay, let me just buy about $10 more. That's 20, right? But you can see 19, so I just lost 17 cents. Yeah, so that's just that. By the way, now I have 99.7, so I've lost 20 something, 23 cents in total. So that's for the market order. It executes immediately. Now for the limit order, it gives you the chance now to set at what price. So this is the current market value, the current market price. And then since I'll be buying from those at the red section. I'll be buying from these guys, that is 2.58. I just have to click on that price, adjust mine to what it is at the market, and then put the amount at which I'll be buying at. The only thing with the limit order is that sometimes if the price at which you want to buy is lower than the current market price, it won't trigger until it meets up with the current market price. That's if it's until it goes up to the current market price. And if I'm selling lower than the current market price, it's going to wait till or if I'm selling higher than the current market price, rather, it's going to wait till the price gets up to that level, and then it's going to trigger my order. Now what about the stop limit order? The stop limit order works the same way as the limit order, only that with the stop limit order, it buys at exactly what price you want to buy at. For the limit order, if the price is at 22.6, if I should place this to $24, is going to buy immediately. All right, and I'll be buying at a loss. But with the stop limit order, it gives you the chance to place a pending order, right? It keeps the order pending. So I want to buy at 24 for some reasons. It's going to keep the order pending till it gets to 24. So let's just look at it. So 24, right? That stop means let the order keep pending until it gets to that price. And then I'm going to buy now, let's say 24.1. So why 0.1? You always want to buy a little bit higher than the market price, because when you place your order a little bit higher than the market price, your order gets executed immediately. And let's say I'm buying $20, right? When I click on buy, it's asking me, it's just showing me an overview, right? You can read that on your own. Now you see it is pending. Unlike the limit order, it's going to trigger like immediately, making me buy at a loss. But this is going to make sure it keeps pending. Maybe I'm waiting for a good market condition and I'll to buy at that price. And the same thing happens at the sell. If you are selling with the stop limit order, let's say you want to sell quite lower or at any price actually, if you're selling the limit order at a lower price, let's say 20, it's going to sell immediately. Why? Because you want to sell at a higher rate, but the exchanger also want to sell, so to make sure you sell to them at a lower rate so they get yours at a good price, if you get the concept. So now you want to sell at $20, right? You can set your limit to 19.9. So why 19.9? You notice that this section is always lower than the current market price. So this is 22.52, but this is 22.51 because it will be executed immediately like that. So $40 is going to put that. Okay, I don't have enough chain link, right? I saw it. So that's just how it's going to be basically. Now for the OC01 cancel the order, this is actually for those who trade. All right, so the limit, let's say the limit market stop limit, is just for maybe a casual buyer and for those who trade basically, but mostly for the casual people, those who are new to the market. But if you are more advanced and then you are trading the market using the spot and not the futures, some people like it that way. They prefer to trade futures and trade spots, and you are dealing with technical analysis. The price for link right now is $22.5. So let's say this is a chart, this is a support structure, right? This is the current market price, this is a resistance, and that resistance above. So this is for those who are quite advanced. Now this is the current market price, and then you want to buy at this level. You want the market to come down so you can buy at that level. Now you want to set your price to buy this price. You want to set it at this level. All right, so let's say this level is $20. Sorry, the screen is getting messy, but let's say that level is $20. You want to buy at $20, and then possibly so you can sell later at maybe at this point, which is 25. All right, and they make 80% profit from that one trade. So now you want to set your price to be 20. Okay, but then there's also a case whereby this doesn't go down. Let's say you're expecting the market to go down, trigger your entry, go up, and then you can sell. But what if it doesn't happen that way? What if the market comes down a little and then goes up and then starts breaking this resistance you are expecting? So you've just missed out of this ride, and it happens a lot. So at this point in time, to just be on the safe side, you want to set another order. So in case this one doesn't get triggered, you want to get your second option triggered, and let's say that could be like around $25 now. So your previous resistance is now support for you, so you want to now buy at $25. For that kind of scenario, you want to initially buy 20, right? But since there's a chance the price could start blasting upwards through the roof, so you set your stop to 25, right? So now this is a stop limit order for your option B. Definitely your limit should be a little bit higher, 25.1, and the amount you want to buy, let's say it is $50, and then you place your order. Now it's going to be pending till either the conditions are met. Okay, so either the price drops $20 for you to buy, and then the second order to buy at 25 will be cancelled, or it waits for the price to get to 25 and the order to buy at 20 be cancelled. So that's why it's called one cancel the other. So once I cancel one of this now, the both get cancelled. The same thing applies for the sell, but the sell is just like a reverse case. Let's say you want to sell at you see the price is actually going to be coming down, so you want it to go up to this point and then you can sell. Okay, let's say this is $50 now, so you want to sell at 50, but then this, so you are expecting the chart to play out this way. Let's say this is the current market price, you're expecting the price to play out this way. Let's say you want it to go up then sell all the way down, right? But then there's also a possibility of the price just going up a little and then start selling massively. So what do you want to do? You want to place a second order to sell at this point, which is like 45. So in case you miss the 50, let it sell at 45 and then keep going that way for you. So at this point, what do? You set your initial price of $50, but what if it doesn't get to 50? So you want to sell at 45, then your limit, you are selling, so you want to sell at a lower rate than the market, so it will be 44.9. the amount of chain if you're selling $50. Then yeah, I don't have enough link, but that's just how it's going to be. All right, so that'll be all for this tutorial. I hope you loved it. I hope you enjoyed it. If you didn't really quite get it clear, especially for the OCO, maybe it's because you're not advanced in this already, so I will advise you to maybe hit me up for a more detailed class on technical analysis. But nevertheless, if you enjoyed the video tutorial, you enjoyed the whole thing, I would really appreciate it if you could like this video tutorial, subscribe to my channel, and then drop something in the comment section. Thank you very much.